What's going on YouTube? It's your boy Dollar Mike and I'm back at it again with another video. You guys already know the deal. It's yet another portfolio update for the month of September of 2022. There will be a couple of portfolio changes coming this month that I'll probably make videos talking about. I do want to make a couple of changes, add a couple of stocks, drop a couple of stocks, and pretty much go about my day with what I see is a positive thing for my portfolio overall. Either way, let's not waste any more time. Let's get right into the video. Let's talk about the portfolio. Let's go over every single stock I own right now as of September 1st of 2022. Let's go. Robinhood app right here. This is my main portfolio where I make most of my trades. I have other portfolios as well, but they're pretty boring. They're pretty basic. I'll show them at the end of this year as we go throughout the rest of this year. Like I said, I don't change those other portfolios as much as I do with Robinhood, so this is where we got to go. Either way, let's go ahead and jump in. And this is also one of my largest portfolios as well. And this is my dividend and growth portfolio if you didn't know. So I'm pretty focused on high yielding dividend stocks overall with passive income and growth stocks as well. Right now, you can see we're down about 1.31%. This is live. It's about 10 a.m. right now. The market just pretty much opened about an hour ago or about 30 minutes ago, I could say. And you can see we're down. We're down about $460 right now. For the past week, we're down about 6.89% or $2,600. Past month, we're down about $2,100. Past 3 months, we're down about $988. Past year to date, we're pretty much right in line with the S&P 500 at about 7,000 or down about 17% or $7,920 for year to date, which I think is kind of crazy, but hey, it's not been the best year for stocks as we all know, but of course, it's a great opportunity to buy some great companies at a great price. Past that, especially for the long term, past that, we're down on the year about $6,186, and overall, all the time, we're still up about 7.44% with $2,500. We need to get back up here. So around November 2021 levels, which we will. Like I said, over time, not too worried about any of these stocks. There's only a couple of stocks in this portfolio that I feel like I'm bag holding on, which is perfectly fine for me because I personally like them a little bit more and I'm willing to pretty much hold those couple of stocks. But for the most part, everything else is just being held for the long term with no worry at all. Past that though, we're gonna scroll on down, got the buying power right there. And the first stock on the list today is ticker symbol AAPL or Apple stock. Apple right now is sitting at 156.58. Of course, the stock prices are going to be fluctuating all day because we're live, it's open. And right now I have about 14.63 shares of Apple, overall up about 20% with my Apple stock overall. And I have a recurring buy on Apple for $20 to $25 every 2 weeks, or every week actually. So with Apple stock in particular, of course I'm not getting rid of any of my Apple stock in the near term. Overall, I do plan on adding more to Apple stock, probably another $1,000 to $2,000 in the near future. Apple should be dropping or announcing their brand new iPhone, I believe, next week, and it should launch probably around September 14th, around that date. iPhone 14, September 14th. So be on the lookout for that. Overall, I do plan on buying some more Apple stock this month, probably about, like I said, about $1,000 to $2,000 worth. So be on the lookout for that. And that's about it. Past Apple stock, of course, Microsoft, don't plan on selling this one either. Sitting at $258.55 a share right now, or $258. We're gonna skip the pennies today. $258 a share right now. Overall, I have 4.29 shares of Microsoft stock, and I'm overall up about 19%, 19.64%. With plans, of course, to buy more. Both of these tech companies are huge. They'll be around as far as I'll be around investing, and I don't have any issue with either one of them right now. With plans to simply buy more, and if I can get them at a lower price, that'd be great. Past Microsoft, we got ticker symbol AMZN. And that is Amazon, sitting at $125 a share right now. Currently, I'm not buying any more Amazon stock, and I have a very good reason for that, which I'll talk about in the future. But overall, do I recommend Amazon stock? Absolutely. I just personally, I'm not buying it right now. Like I said, I'll talk about that in the future and why I'm not buying it. But overall, 5.59 shares of Amazon stock, overall up about 26%. I just recently bought this or pretty much put it on my portfolio. But like I said, we'll get into all that in the future. Past Amazon stock, Tesla, one of my favorite companies. Of course, they just announced their stock split and actually initiated that. So Tesla is no longer trading around that $800 price range. Now you can see it's around $272. So if you want to grab yourself some Tesla stock, this might be one of the best times to go ahead and do it. It's down right now as well. $272 a share. Overall, I have 15.55 shares of Tesla right now, and I'm up about 42% with a recurring buy of $10 every single week, with, of course, plans to buy even more Tesla stock. It's funny, I was actually looking at some electric cars yesterday because I gotta get another car, bruh. But right now, it's just a terrible time to buy a car, so that kind of sucks. But Tesla's cool. Right now, the Model 3 is pretty much backed up until 2023, so that kind of sucks. But overall, like I'm really enjoying Tesla stock price. Of course, I'm really enjoying the money I've made off of Tesla stock in the previous past, and in the future, we'll see where it goes. I mean, it's a lot of competition coming out over the next 2-3 years when it comes to electric cars, and maybe Tesla won't be that #1 gem. But overall, right now, I think still to this day, the best car to buy as far as an electric car is a Tesla. That is my personal opinion, so don't fight me down in the comment section. But like I said, things could change in the next 2-3 years, and I'm excited to see it. Overall, do I like Tesla? I think the Model 3 looks okay. I don't think it's the best looking electric car, but that's besides the point. Either way, Tesla stock, I'm going to be buying some more. I do believe in Tesla, Elon, SpaceX, everything that he owns pretty much, and I like riding with that. Past Tesla stock, we got ticker symbol DGRO, which is my dividend and growth ETF. Right now, it's sitting at $48.52 a share right now. I have about 105 shares of DGRO, and I'm overall down about 4% with plans to buy more. Simply just building this out. Overall, they pretty much hold different types of stocks in the portfolio. We go to their top 10 holdings. We can see they hold a lot of Apple, a lot of Microsoft, big on those companies. I don't have too much Johnson. I don't have any Johnson & Johnson in my portfolio, so it's nice to get some exposure to that. I also don't have any Home Depot in my portfolio as well. I have Lowe's, but nice to get some exposure. And some healthcare stocks like Pfizer are also in there as well, which I don't have in this portfolio, so it's nice to get some exposure. Past that, though, pretty much just plans to buy more. It's a giant ETF. It's like you investing into 100 different companies at one single time, buying one single stock, because that's exactly what it is. So past that, nothing else to really say about DGRO. You guys know I talked about DGRO multiple times on the channel before. Past DGRO, we have ticker symbol JEPI or JEPI, that stands for JP Morgan Equity Premium Income, sitting at 54.48. I made a whole video talking about JEPI, pretty much how I sold QYLD to buy JEPI, and I have no issue with JEPI right now. It's actually holding up pretty well. It's only down about 2%. Overall, I have 36 shares with about a portfolio diversity of 5%. This is just a nice passive income driver for the portfolio. We'll see how things play out as I move forward throughout the rest of this year and next year with my portfolio. Maybe JEPI will be replaced with something else. Maybe not. Maybe I'll focus more on just dividend stock straightly and just skip the whole income part until maybe I retire or something. I'm not entirely sure, but right now JEPI's in the portfolio, and I talked about all of that in my QYLD video, so make sure you check that video out. It'll be linked right up at the top. Past that, we got ticker symbol O or Realty Income. Realty Income has not done much over the entire year, which is a great thing. It has not fallen too much. It has not risen too much. It's overall just held its ground, which I'm pretty happy about. Overall, they own a whole bunch of different commercial real estate, if you didn't know. It's sitting at $67.82 a share right now. Overall, I have 11.7 shares, overall up about 15%, and I definitely need to buy some more. It's pretty expensive, but I need to grab some more. Like I said, I have too many stocks in the portfolio, so it's hard to focus on one or two particular stocks when I'm trying to buy so many different stocks with a limited amount of money at the time. So, like I said, overall, plan to slim things down in September. We'll see how things play out, and we'll go from there. Past that, we have ticker symbol STAG or Stag Industrial, 30.48 a share right now. We scrolled down, have a dividend coming in on September 15th for Stag of $6.30, and I have about 52 shares of Stag with a recurring buy of $5 every single week. As you can see right now, I'm down about 20% on my Stag stock. I do plan on grabbing some more Stag if it hits around $28 a share. I think that was my price target. And yeah, if it does, I'll probably end up buying about another 50 shares or somewhere around that line, that point. 50 shares, probably something like that, around $28 a share. So yeah, no issues with Stag. Definitely plan on buying more. I think it's a great REIT to have for long term. So no issues. Talked about it before plenty of times. Past that, Medical Properties Trust. I'm not a huge fan of Medical Properties Trust right now. I honestly thought it would do or fare a little bit better, but I mean, it's okay. Overall, it's at $14.37 a share right now. And I have about 60 shares, down about the same as Stag, about 20%. Not too much money, only $200, which isn't crazy. But their dividend yield is about 7% right now, of course, because of the low stock price. And I do plan on buying some more. I'm just trying to figure out where I want to really grab MPW at. Honestly, I don't think I'm going to hold this long-term in the portfolio. I've seen other REITs that I simply like a little bit more than this one. So long-term, this probably won't be here. Maybe after about a year or so, I'll probably get rid of this and trade it for something else. We'll see how things play out. It could be sooner than that, but I'm just letting you guys know. As far as Stag, though, keeping Stag for the long-term for sure. And Medical Properties Trust, we'll see. Past MPW, though, we got ticker symbol BA or Boeing. I believe they actually just got awarded another contract for, I believe, $2.1 billion. Correct me if I'm wrong. That was today, September 1st. Sitting at 153 a share right now. I have about 5 shares. I have not bought any Boeing ever since I bought my original 5 shares. Nothing much else to talk about it. Simply holding what I got with plans to buy more eventually, but I'm in no rush to do so. Past Boeing, we have ticker symbol KO or Coke, 6151. Overall, just one of those stocks that you just have in your portfolio. You don't have to, but I think it's just a solid dividend payer. Sitting at, I have 12.6 shares, overall up about 28%, with plans to buy more. I'm not heavily invested into Coke, obviously, but I do plan on getting some more over time. Like I said, we got to slim down the portfolio so we can focus on a lot more of these key dividend stocks. Past that though, Procter & Gamble, same thing kind of goes here. Not heavily invested, but I love Procter & Gamble, and I use all their products, just like you do probably, on a daily basis. Sitting at 137 a share right now. I have about 5.65 shares, overall up about 6%. Nothing crazy there. Past Procter & Gamble, we got ticker symbol ALLY or Ally Financial or Ally Bank. I mentioned them in a previous dividend video. I think this is a great dividend stock to pick up. Warren Buffett just picked up tons of shares of Ally Financial not too long ago, about a week ago. And yeah, I really like Ally. I think the banking stocks have been taking a crazy hit this year, which makes perfect sense. And overall, I'm down about 13% with my 35 shares. Definitely plans to buy more of Ally Financial. Past Ally, we got ticker symbol JPM, another bank, of course. Overall, 112 a share right now. Tons of plans to buy more of this, especially at this price point. Crazy. 11.6 shares of JP Morgan Chase, overall down about 18%. Easy money. Past that, XOM or ExxonMobil, we all know how gas did this past year, or this year so far pretty much. Gas prices have been coming down slowly, but of course Exxon is still making bank, and as in bank, I mean billions of dollars off of pretty much gas prices and everything like that. So we'll see how things play out for the rest of the year and probably the beginning of 2023. But overall, I have about 10.9 shares. I actually ended up selling half of my investment. A couple of months back, I made a video talking about why I sold about half of my investment. And honestly, me doing that was actually a great thing, because I put that towards other dividend stocks. It was actually at a higher price point than this. I believe it was at $106 a share when I sold, and it really hasn't been around there since I sold it. So I think I made a pretty safe investment. Overall, Exxon for the long term, definitely gonna be buying it, but I simply had too much gains, and I just wanted to take that money, put it somewhere else, and put it to work somewhere else. Obviously, Exxon's great because I'm still up 94%. So yeah, plans to buy more, of course, and the dividends are gonna be reinvested back into the stock as well. Past that, Kinder Morgan, I do believe in natural gas for the long term. Kinder Morgan sitting at $17.95 a share. I have about 52 shares of Kinder Morgan, overall up about 3%. They pretty much handle natural gas. We'll see how that goes in the future. I believe in it in the future. I think there is a place for natural gas in the future, and I think that'll reflect in Kinder Morgan stock, depending on what type of government and administration we have going forward in the future as well when it comes to America. So we'll see how things play out. We just kind of have to wait and see on this one, but I do want to go ahead and grab a decent amount of shares, probably get up to about 100 shares before, of course, an announcement like that is made or a transition like that is made. So yeah, I like Kinder Morgan, and they pay a nice dividend as well, about 5-6%. So cool stuff there. Past Kinder Morgan, we got ticker symbol DIS or Disney. I know I told you guys so many times, and to buy some Disney stock under $100 a share. I bought a little bit, didn't go crazy because I just didn't have the money to go crazy. Right now, Disney is sitting at $110.84. Overall, if we scroll down, I have about 8 shares of Disney, and I'm overall down about 11% overall. And I said overall like 6 times in that sentence, so let me know how many times I say overall in this video in the comment section down below. Just let me know. Either way, recurring buy on the Disney for $11 every single month. That's pretty much to match my Disney Plus subscription. If you guys don't know, Disney is actually increasing the price of Disney Plus to, I believe, from right now, I think it's like $8 to $10 or something like that, or $8 to $11 or something like that. They're actually adding ads to their Disney Plus platform. You guys don't know what Disney Plus is. It's pretty much their streaming platform where you can go and watch everything Disney, shows, movies, whatever, everything. Either way, I use it faithfully. And I pretty much watch every single Marvel show that comes on there. But the point I'm saying is they're increasing prices of Disney Plus, which of course will correlate to higher gains when it comes to their actual income. So they'll probably bring in an extra like $500 million in revenue yearly once these price increases actually go into effect. I don't think it's in effect just yet, but they're making the lower tier list, which is about $8 a month. They're going to add ads to that. And then if you want no ads, I believe it's $10.99 a month. So all that extra $3 or whatever they're going to receive, easy money for Disney. And that's just Disney Plus alone. That's besides the parks and all the likenesses, the characters, the toys. Disney's okay. Disney will always be okay for the long term as far as I'm concerned. But yeah, definitely gonna be buying some more Disney stock is what I'm saying. Past Disney, we got ticker symbol LOW, which is actually surprisingly up today because mostly everything on the stock market is down today. And Lowe's is sitting at 194 a share. We scroll down, I have about 5.38 shares of Lowe's. Overall, up about 10%. Nothing crazy to say about this. Lowe's, Home Depot, I think they're both great. I think Home Depot is actually a little bit better in value right now to go ahead and grab. But if you want to grab something cheaper, stock price wise, I think Lowe's is good as well. So can't really go wrong with either one. I have exposure to Home Depot in that DGRO ETF, so I'm cool with that. And then Lowe's can just be my separate. I'm buying it on my own pretty much. Past that, we got ticker symbol WBA or Walgreens. You guys know I love Walgreens stock. It's funny because they haven't been doing too well over the past 5 years. Like I see that past down 57% over the past 5 years. But I do see a green light for Walgreens in the future. If it doesn't work out, it doesn't work out. I'll still get paid some decent dividends without suffering too much loss. So we'll see how it plays out with Walgreens over the next couple of years. But I do think, after making my Walgreens CVS video, be linked right up there, I do think for the long term, I think Walgreens will be okay. I don't think it'll be the best growth dividend stock that you could buy on the market, but I think it'll be okay, and you can make some decent gains off of it while still collecting a solid dividend. I believe around 4% right now, which we can check that. Around 5% right now, so even better. Overall, I have about 31 shares, down about 18% with plans to buy more. Past Walgreens stock, we got ticker symbol VZ or Verizon. I actually really do like Verizon. AT&T, honestly, either one isn't too bad right now. I just like Verizon more personally, so that's why I have Verizon stock sitting at $41.84 a share right now. It hasn't done well over this past year as well, just like AT&T. The communications industry is really taking a hit, but I am looking at another communications-like stock that might be a perfect replacement for Verizon, or just an addition to Verizon to add to my portfolio that does have high growth and does provide a decent dividend yield. I might invest in it this month. We'll see how things play out, and I'll talk about it when that time comes. But I'm down about 20% overall. Overall, I have about 36 shares with those down that 20%. So yeah. Past VZ though, we got ticker symbol MAIN or Main Street Capital, $40.59 a share. We scrolled down 35 shares, overall up about 6%. Nothing crazy to say there with Main Street Capital. They pay a nice solid monthly paying dividend. Cool with it. Same thing with PSEC. Nice solid monthly paying dividend, $7.32 right now. Overall up about 50%, 120 shares roughly. Cool stuff. Past that, BGS Foods. This will be off the portfolio this month. I've been talking about BGS for a minute now, and it's some BS. But overall, BGS Foods down about 2% today, which is ugh. Overall, I have about 52 shares, and I'm down about 27%. I do plan on replacing this with another food-like stock. I'm looking at Nestle, Tyson's, McCormick, stuff like that. So we'll talk about that in the future when I end up selling it, likely sometime this month, and we'll go about our day that way. They do pay a nice dividend of about 8%, so if you want to go in and grab yourself an 8% dividend yield on a suffering stock, I really wouldn't. But, do what you want. You know what I'm saying? That's an option for you. Past that, Target definitely be invested into in the long term. I'm really trying to refocus my portfolio on stuff I actually buy, use, and all that kind of stuff. And BGS, I simply don't buy any of their products at all. So I'm not really sure why I bought this. I probably bought this a long time ago when I was in the mindset of just buy the highest dividend yield, which is a bad mindset to be in. Do not do that. Either way, go back on over to Target. Sitting at $159 a share right now. I think it's a great time to buy Target. They've taken a major hit over the past, about the past year, because they were up here, let's see, around 250. And I think they had a bad earnings, and they just been down here ever since. And that sucks for the people that were invested back in November. That really does suck. But I mean, it is what it is. It's the stock market, So we scroll back down, 1.43 shares. Obviously, I don't have a huge position established on Target at all, but I do plan on establishing a large position with Target in the long term. Past Target, Coinbase most likely will be off the portfolio. I just don't see Coinbase recovering. I mean, if Bitcoin doesn't really recover, then Coinbase won't recover. That's just as simple as it gets. This completely follows crypto, and on top of that, it still has stock market exposure. So, like I said, if Bitcoin's not jumping up to $80,000, $100,000 a coin, Ethereum's not running, then Coinbase won't run either, and that's just the sad fact of it. So, I think cryptocurrency will recover, definitely over the long term. But for me personally, right now, I just don't see the point in having this. Sadly, I wish I realized that before I dropped 75%, on my investment. But, it is what it is. We all make mistakes. I just made a little bit longer one. You probably already got out of Coinbase months ago. Who knows? Either way, down about 75%, overall 6 shares. Luckily, I didn't put way more money in because I did plan on doing that at one point in time. Luckily, I didn't. And yeah, so Coinbase will probably be gone. But the next stock I'm bag holding probably, well, not the next stock. This is gone too. I'm just gonna skip over this. The next stock because there's no money here, by the way. It's weird. I don't know why it's here. It needs to go. Past that though, AvePoint. I might as well. You know what? We're not doing this today. We're getting rid of this right now. I'm sick of it. It's 75. Well, I don't care. I'm tired of seeing it on portfolio. They're blowing me. I don't care. Past that, AvePoint. I actually really do like AvePoint stock. I've been talking about the stock for over a year now, I feel like, and I'm not selling it. I'm not selling it. I still think the company is solid long term. I think they'll be okay, and I think my investment will go up to about. We'll see where it goes, but I'm not selling it. So this is probably the only stock that I'm bag holding. 250 shares, down about 64% or $2,000. I'm cool with it because I really do believe in this company for the long term, and it's just that simple. I think if you really look at this company, do the research on it, and want to get into it, this is probably one of the best times. Anything under $5 a share, I think it's probably really great right now. Obviously, I bought it at a bad time. I bought it when they first pretty much IPO'd on the stock market or SPAC'd onto the stock market, and that was pretty much it. So sadly, I didn't get it the best time, but you had the opportunity to if you do your research and find out this is one of the stocks that you want to be invested into. So that's pretty much it for the portfolio. Hood stock is gone. Robinhood Markets, that is gone, and the market is it went down a little further, I think, since we started this video, but it looks like it might recover. We'll see. Either way, September is not the best month for the market overall historically, but I'm not too worried. Well, I'm not worried at all. I mean, I'm not selling any of the major companies, so we're good to go. Either way, you guys already know the deal. You know, I'm buying more of this stuff come pretty much this month, and we'll be all good to go. I definitely want to grab some more Apple stocks. So like I said, probably $1,000 more in Apple stocks. We'll push that up to about $3,200. Cool. Yeah, $3,300. Whatever. You guys get the point. That's all I really got. I'm blabbing. That's all I really got. Either way, that is the full portfolio for September of 2022. Yeah, you know, I'm all over the place today. But yeah, this is one take. We're only doing one take. So that's pretty much it. That's all I really got for today's video. If you guys enjoyed, let me know down in the comment section below. What stocks are you buying for this month? Are you just like holding out this month, saving some money, and then reinvesting it maybe later on? Are you completely out of the stock market? Are you just jumping into the stock market? Let me know. You know, of course, and on top of that, if you're starting your journey out, then get some free stocks. The free stocks are linked down below. Robinhood's going to give you a free stock, I think worth at least $35 right now. Weeble's going to give you like 10 stocks for free right now, which is crazy. Weeble's always giving tons of free stocks. So honestly, if you just want some free stocks and you just never had a Weeble account, just make a Weeble account, deposit $100 and get some free stocks. You don't have to keep it on Weeble. You can put it on Robinhood. You can just sell it all and get the money. Completely up to you. I mean, that's a lot of people do that, surprisingly. I mean, it's not surprising. It's free money. Go ahead and take it. Take advantage of it. It might not always be there. But past that, M1 Finance, I think you'll get a free $30 with my link with M1 Finance, and that's pretty much it. So that's all we got for today's video. Just a portfolio update. I'm out. Take care of yourselves. I got more content coming, more personal finance content. Follow me on TikTok. Dollar Mike. Peace.